Hey traders, Jason here from Leavitt Brothers. Instead of talking about the market or offering a few trading ideas for the next few weeks, I'm going to talk about a couple losses I recently had and show you why it's so important to cut losses. Okay, here's my TC3000 trading platform, which I've been using since 2000. I recently upgraded to the newest version and I'm still getting used to it, so if I wrongly click a button here, cut me some slack. All right, let's go over a couple of these losses. First one was in Micron, ticker symbol MU. On the left here we have the daily chart. On the right here we have the hourly chart. I'm just going to be talking about the daily, so you can look over to the left. All right, so if I back up the chart, you can see we have a nice run, consolidation pattern, end of the year, beginning of this year, and then it runs up again, up into the 60s. Really strong chart, good story, everything's in place. So where I played this bounce right here. Okay, it was coming down to the 50. It closed below it, but then it reclaimed the 50. So I got in somewhere around here. I think it was like 52. Let me zoom in a little bit more. You can see this candle right here where it opened lower, big up candle. Volume was average, but big up candle, closed at the highest level in like three and a half weeks. Everything was looking really good. Next day, stock gaps down and it sells off hard, gives everything back. Okay, at that point in time, you got to make a decision. Okay, if you got in because you were playing the 50-day moving average, then you have to put a stop below the 50, and if it goes below there, you got to get out. If you don't do that, what happens is the next day it opens up, tries to push higher, and it closes down in the bottom like third of its range below the low here. And if you don't get out there, then the next day it opens up and then gives even more back, and it just rips your heart out. Like literally you got a lump in your stomach that you cannot believe you had such a great trade that was showing you like a $2 profit, and now you're down like $3 or $4. Next day gaps up, pushes higher, you're thinking this is it, finally it's going to bounce, and then it just gets clobbered. Day after day after day, it just eats you alive, and then finally you puke your position, and then at that point in time, psychologically you're destroyed. Okay, psychologically you can't even function for the next week because you're so mad that a 2-point profit has turned into like a 4, 5, 6-point loss. Okay, it is so important to cut the loss here, because then you will be your mind will be free and you'll be able to look at the chart with a fresh set of eyes, and you'll be able to play the next opportunity that comes, and the next opportunity that comes tends to be the big one. Okay, the fact that you got into a strong stock and it went against you just means your timing was a little bit off. Okay, so as you can see here, if you got out with a small loss and then you waited and you waited and you waited, then you have a little base here at 45, which was a key level. If I back it up again, you can see 45 was resistance here. Came down, found support at 45 here, and then it went 10 points. Okay, so letting a 1 or 2 point loss turn into a 5, 6, 7-point loss is bad, but actually the bigger loss is the fact that you're so psychologically messed up that you then miss this 10-point move. Okay, we all have 2 bank accounts. One is like our real bank account where the money is. We also have a psychological or emotional bank account. And when you let a small loss turn into a bigger loss, you take withdrawals from your emotional banking account because it just eats you alive that you can't believe what you just did. Okay, and when your emotional bank account is running on low, you become paralyzed. You're unable to function. You're unable to take the next trade. Okay, I can tell you this, after trading for 18 years, I can tell you that the missed opportunity is often much greater than the initial loss. That losing a buck or two is bad, but missing the 10-point move that follows is obviously much greater. Okay, so when you do so like I was in here, get out relatively quickly. It sucks when you have a really good trade one day and the next day it completely goes against you. It's hard. But if you get out here, then you can look at the chart with a fresh set of eyes, and a week later you have a new opportunity, and boom, a 10-point move. But if you don't take the small loss, you'll be so screwed up psychologically, you'll end up puking the position at exactly the wrong time, and you won't nail this, or if you just stay in at a position where you probably could be doubling up on at a place where you probably could be doubling up, you won't. You'll just stay in, and when it comes back up here, you'll end up getting out, break even, and being thankful. And whatever happens, you form a bad habit, and there's nothing good can come of it. Okay, so you take your loss, wait a little bit, look at the chart with a fresh set of eyes, and then the next opportunity that comes often is the big one. All right, let's look at one more. Square is another one that I traded and lost on initially. Okay, if I back up the chart here on the left, you can see Square rallied up, traded in this big range here, okay, between about 35 and close to 50, broke out in March, went up, you know, into the high 50s, and then came down and did this double bottom before going, you know, right now it's going back up. Okay, so I played this bounce. Once it got back above its 50, if I back it up again, you can see like a resistance level is going to be somewhere in here in the 47, 48 range. So once it got comfortable here and started moving up, I played it in here and initially had a gain as it got up here to 51, 52. Okay, but then you know, we had a down day here, which is no big deal, but then we had a huge down day here. Okay, if you stay in through this entire down day, you are going to end up puking your position. You know, it's going to go below the previous low here at 45. You're going to end up puking your position, and you're going to be so messed up psychologically that it recovers, grinds up, grinds up, grinds up, grinds up, and the next thing you know, it's up like 10 points off its low. Okay, so if you take the small loss over here, then you could take a big deep breath, look at the chart with a fresh set of eyes, and you could probably play this. Okay, but if you stayed in through this drop, you'll be so messed up you won't play it at all. Okay, you'll just be paralyzed. It'll go back up, and you'll sit here and wonder, how in the world did I just lose 2 or 3 points or 5 points on a stock that is now at a 6-week high? Okay, so you guys get the point here. Losing money is bad. Losing a buck is bad. Letting a small loss turn into a bigger loss is obviously much worse. Okay, I'd rather lose $2 than 5. But the even bigger loss is the fact that the loss will paralyze you. It'll eat you up inside. It'll paralyze you psychologically, and then you'll miss the 10, 20-point move that follows. Okay? Thanks for listening. If you liked the video and want me to do more, give it a like, share it with your trading friends. Come check us out at Leavitt Brothers, leavittbrothers.com, leavittbrothers.net, where we provide trading ideas and market analysis. If you're not ready to subscribe, there's a link in the show notes below where you can sign up for our email list to be alerted of new content, or you can subscribe to our channel right here at YouTube. Again, thanks for listening, and I'll see you next time.